Assalamu alaikum and hello Madam Noordea binti Ismail. We are Group 1 from AM 2354B, and today we will be presenting our ACC 426 Taxation 1 group assignment. In this presentation, we will cover the main components of the tax simulation, including the determination of resident status, the computation of statutory employment income, the computation of statutory business income, Schedule 3 capital allowances and balancing charges where applicable, and finally, the computation of individual income tax payable for the year of assessment 2025. Without further ado, let's begin our presentation.
Miss Phuong nationality are Vietnam. She have arrived at Malaysia at June 6, 2020, but she is non-resident because she stay only 32 days. Then at July 8, 2020 she departure to Singapore and come back to Malaysia at May 30, 2021. She become resident in Malaysia because according to Section 7(1)(a), she stay at Malaysia more than 182 days. Next she departure to Chicago at December 30, 2021, then come back again to Malaysia at January 11, 2022. She's still a resident at Malaysia, according to Section 7(1)(b). Her short period can be linked to 2021. At February 22, 2022, she departure to Indonesia and have arrived at Malaysia at May 22, 2023.
Next she fly to Taipei at 4 September 2023 and come back to Malaysia at 4 April 2024, according to Section 7(1)(c). She are resident because she stay more than 182 days consequently. Next, she fly again to Taipei at 31 July 2024 and come back again to Malaysia at 12 February 2025. She are resident according to Section 7(1)(d). She stay at Malaysia less than 90 day, immediate preceding year are resident and following year resident. Then she departure to China at 20 August 2025. Lastly, she's still resident at Malaysia because she stay more than 182 days according to Section 7(1)(a).
Next, I will explain employment income of Phuong. Section 13(1)(a). We have salary per month Rm 7,300 multiply the EP 11% 100 divide 89 multiply 12 month equals Rm 98,426. The monthly entertainment allowance is Rm 1440 multiply 12 month equal to Rm 16800. Traveling allowance is Rm 900 multiply 12 month equal to Rm 10800. The traveling allowance have exemption, Rm 6000, and the amount after exemption is Rm 4800. The bonus per year 2025 is Rm 12,000 and share is Rm 2750. The total number of sections is Rm 134,776. Next is Section 13(1)(b). The benefit that Phuong received from its company is car amount Rm 7,000 include with driver Rm 600 per month, and multiple with 12 month is Rm 7,200. Maid and guard is Rm 400 multiple 10 month equal to Rm 4,000. Then a semi-furnished house with an air conditioner amount is Rm 70 multiple with 10 months she stay at the house, equal to Rm 700. Leave passage to Singapore amount Rm 2,400 and get exemption Rm 3,000.
Leave passage for Thailand Rm 2,300. Gym membership Rm 3,100. Medical and dental mother of Phuong is no means no taxable and exempt from income tax. Lastly is daycare of Phuong mothers Rm 3,550. The total amount in Section 13(1)(b) is Rm 31850. Then is Section 13(1)(c) is for house and hotel. The format is bungalow, lower of, and the defined value is Rm 2,900. The calculation is 30% multiple with total amount of Section A, Rm 134,776 minus amount of share, Rm 2750. Equal to Rm 39,607. Next step is the valued of house, DV Rm 2,900 multiple, with how many months Phuong stay at the house 10 months per 12 equal to Rm 2416. Phuong has stay at hotels and the calculation is 3% multiple with total amount of Section A Rm 134,776 multiple with
number of Phuong stay at the hotels which is 2 per 12 month equal to Rm 674. Compare the amount and choose the small one. which is RM 2416 plus with the amount of hotel RM 674 equal to RM 3090. Gross employment income must plus all the total number of Section 13, 1, A, B, C, and you will get RM 169,716. Gross employment income must minus with allowance expenses, which is entertainment expenses RM 16,800, and the traveling expenses after the minus with the exemption is RM 2,000. The total number you need to minus is RM 18800, and you will get RM 15916 as statutory employment income.
This financial calculation determines the final divisible profit for the partnership between Phuong, Nayla, and Jimmy. The process involves adjusting the net profit, totaling individual partner allocations, and subtracting those allocations to find the residual income. The process begins with the business net profit of 41,900 ringgit. First, a non-allowable depreciation expense of 3,700 ringgit is added back. Next, all individual partner allocations are added to the pool. This includes interest on capital for all three partners, based on a 5% annual rate, individual partner salaries, and personal drawings. When the net profit, depreciation, and all individual partner allocations are added together, the business arrives at a provisional adjusted income of 124,175 ringgit. To determine the final amount to be shared, the grand totals for each partner expense category are subtracted from this provisional income. Specifically, the total interest on capital of 5,475 ringgit is deducted, followed by total partner salaries of 71,200 ringgit and total drawings of 1,900 ringgit. After subtracting these total private expenses from the provisional adjusted income, the final remaining divisible income is 45,600 ringgit. This residual amount of 45,600 ringgit is the final profit that will now be distributed among Phuong, Nayla, and Jimmy, according to their agreed partnership profit-sharing ratio. This financial breakdown details how the divisible income and expenses are distributed individually to Phuong, Nayla, and Jimmy to find their final total income. The process begins by dividing the total divisible income of 45,600 ringgit into two time periods. The first period allocates 26,600 ringgit based on percentages, giving Phuong 10,640 ringgit, Nayla 9,310 ringgit, and Jimmy 6,650 ringgit. The second period allocates 19,000 ringgit between Nayla and Jimmy using a fractional ratio, giving Nayla 11,400 ringgit and Jimmy 7,600 ringgit. Next, these shares are combined with each partner's specific interest on capital, salary, and drawings to find their adjusted income. This results in an adjusted income of 32,915 ringgit for Phuong, 51,610 ringgit for Nayla, and 39,650 ringgit for Jimmy. Finally, a capital allowance deduction of 6,300 ringgit is split between Nayla and Jimmy using a fractional ratio. This final deduction reduces Nayla's final total income to 47,830 ringgit, and Jimmy's final total income to 37,130 ringgit. Because Phuong has no deduction, her final total income remains unchanged at 32,915 ringgit.
Next, I will explain the computation of statutory business income for FTSE Enterprise for the year ended December 31st, 2025. We start with the net profit of RM 133,070. Then, we make tax adjustments by deducting non-taxable income, which is the dividend income of RM 13,000. Next, we add back non-allowable expenses such as depreciation, remuneration for the owner, general provision for bad debts, renovation costs, donations, motor vehicle lease rental, penalties, business zakat, and income tax appeal expenses because these are not fully deductible under tax rules. Some expenses, such as the salary and HRA for the disabled employee and the tax refund from LHDN, are allowed, so they are deducted. After all the adjustments, the adjusted business income is RM 257,250. Finally, after deducting the capital allowance of Rm 2800, the statutory business income is Rm 236,450.
Now, I'll continue with Part 2, which is the Industrial Building Allowances, or IBA. First, let's look at the factory building. The total cost of the building is Rm 363,000, which includes the architect fees of Rm 25,000, the cost of preparing plans of Rm 18,000, the construction cost of the factory warehouse of Rm 300,000, and the installation of water and electricity of Rm 20,000. However, the cost of land is not included because it does not qualify for industrial building allowance. Besides that, the administrative office occupies 15% of the building. Since it is more than 10% of the total building area, it cannot be treated as qualifying building expenditure, or QBE. Therefore, only 85% of the total cost qualifies, giving us a QBE of Rm 308,550. Next, we calculate the allowances. The initial allowance is 10%, which is Rm 30,855, and the annual allowance is 3%, amounting to Rm 9,257. After deducting both allowances, the residual expenditure is Rm 268,438. Next, we move on to plant and machinery. The total qualifying expenditure is Rm 360,000, which consists of the site preparation cost of Rm 280,000 and heavy machinery costing Rm 80,000. Since the site preparation cost is more than 75%, it can be included as part of the qualifying building expenditure. Therefore, the QBE is Rm 360,000. The initial allowance is 10%, which is Rm 36,000, while the annual allowance is 3%, amounting to Rm 10,800. After deducting these allowances, the residual expenditure is Rm 313,200. That concludes the Industrial Building Allowances section. I will now pass the presentation to my group member to continue with the partnership computation. Next, I will explain the computation of Phuong's personal income tax liability for the year of assessment 2025. Phuong's total income consists of business income of Rm 169,350, partnership income of Rm 32,915, employment income of Rm 150,916, rental income after allowable expenses, and other income of Rm 2,100. This gives an aggregate income of Rm 374,598. Since there are no approved donations, the total income remains Rm 374,598. Next, personal tax reliefs are deducted, including personal relief, EPF, child relief, sports equipment, medical insurance, life insurance, medical treatment, lifestyle expenses, composter, supporting equipment, and medical expenses for parents. After all reliefs, the chargeable income is Rm 327,768. The income tax is then calculated based on the tax rates. The first Rm 250,000 is taxed at Rm 46,900, while the remaining Rm 77,768 is taxed at 25%, which is Rm 19,442. Therefore, the total and final net income tax liability for Phuong is Rm 66,342. Thank you.